really no benefit of holding overnight risk, this is where you want to double down on your sleep. You want to take your vitamins, you want to lay off the alcohol, you want to get good night's rest, and you want to hunt for that opportunity. Welcome back to the Trade Risks YouTube channel. I am your host, Evan Medeiros, and it's been a little while since we've done a free-form sort of educational video here on the channel. So I recently wrote this blog post and I wanted to do a video version of it, give the YouTube channel a little bit of love here. For those of you who are joining us for the first time, we've got lots of little bite-sized lessons across our YouTube channel and our website, just like this video. But the best way to learn more about what we do here is to join our newsletter. Should be a link in the top right appearing now. There's also a link in the description of this video. Free weekly newsletter, won't bug you or harass you too much. We've also got timestamps in the description below of this video. So this all started from a recent performance review that I was doing. So every single month I sit down and I look at the trades and performance of our trading systems that we're running here at the Trade Risk. We've got 3 of them in production right now. And every month I publish a performance report to the website. You can read it going back now 4.5, almost 5 years. And so I want to talk first about market environments. We've got other posts on the website. I'll see if I can link them in the description of this video where we talk about the regime of a market, whether it's a stock or the market as a whole, the stock market. There's lots of ways you can classify a market environment. You can use market breadth, you can use moving averages, you can use trend analysis, you can use any number of things. Volatility is one way to do it, and volatility is what we're going to be talking about in today's video. And I don't want to get too scientific. This isn't a back-tested study. This isn't something I'm recommending to go out and trade on an actionable, trade signal basis. This is for illustration purposes, but I just want to observe the VIX here and basically say, if the VIX is over 20, okay, that is this line right here on my chart now. So this line right here, if the VIX is over 20, I would consider that a higher volatility environment, okay? And if the VIX is below 15, I would consider that a pretty low, calm market environment. And then you kind of have this messy middle section when the VIX and the market is trading between 15 and call it 20. You're kind of in this in-between state where things are choppy and there's a little uncertainty, but it's not a full-blown sort of fear, panic-driven market. Another way to illustrate this, okay, is take a look at this VIX chart here. At the time of recording this, the VIX briefly spiked up to north of 20 here at the end of April, and now you can see it's back down around 13. Now, if we go to our next chart here and we just put the S&P 500 on, because the VIX is a measure of S&P 500, those are the options, that's the movement that it's essentially measuring here. And I've got this indicator on the bottom of my chart, and this is just simply looking at the average daily percentage move, okay, using ATR. And so what we see here is at the end of April, the S&P 500, by this little indicator here where this circle is, was moving approximately 1.4% per day. Look where the movement is as we currently record this. The VIX is at 13 now. And you can see that the average daily percentage move in the S&P 500 is down to 0.7%. All right. So what this is telling us and showing us, and this is how we're classifying markets, is that using the VIX, we can understand where and how much the market is moving, how much flow is coming in, and just how much general anxiety there is in the market. Now, if we go back to our blog post, we talked about Bob the day trader. Okay, we painted this picture. Just imagine your favorite day trader, or maybe you are a day trader yourself, and you're placing 10 trades, 20 trades, 30 trades, 50 trades a day, and you're going home 100% cash, okay? You're looking for opportunity during the market session, and you need to make your paycheck while the market is open, and you're going through those opportunities looking for fast moving stocks and general trade setups. I would argue that for the day trader type, which might include you, the listener watching this right now, you're going to potentially be overworking yourself or trading too hard when market environments cool off to the degree that they are right now. Back to our current market example, with a daily move of 0.7% per day, or looking back at the VIX, when the VIX is below 15, currently at 13.3, it is like watching paint dry out there. Now, there's obviously going to be some pockets of stocks moving. There are always going to be news headlines. There's going to be some panic, and there's going to be some chasing momentum trades that are always happening at all times. But generally speaking, the movement is going to slow to a crawl. Let's dial this back. We're going to come back to Bob here in just a second. And this all stemmed, like I mentioned, from a review of our own trading systems. So we've got 3 trading systems here. And I was going through my May report. Quickly, you can realize here that with these 3 trading systems, let's go right down the list. Our first one, Galahad, here has closed 5 trades year to date. So I'm recording this in May, so it's been almost 5 months of trading, and it's only done 5 closed trades. Our second system, Merlin, here has done 60 trades year to date, and our third system, Lamerick, here has done 117 trades year to date. Now, to the right, you can see the performance that these have posted so far throughout this time period. Galahad, which has only made 5 trades, is up 25% year to date. Merlin up 7.12 and Lamerick up 7.07. Now, I'm very happy with these results. I wish every year was like this come mid-May that we have this type of performance, but realistically, it's not. The point, though, is that Galahad has traded 1/10 or 1/20th the amount of our other 2 trading systems, yet it's produced 3.5 times the net performance of those 2 trading systems. So picture this scenario. You have these 2 trading systems that are working their butt off, that are trading multiple times a week, certainly, rotating through trades, looking for opportunity, working really hard, and they still can't keep pace with a trading system that is basically sitting on its hands, holding positions, and not doing a whole lot. Now, this again speaks to the market environment. So year to date, when I recorded this, 14.15 year to date from 2024, if I were to draw this, if I were to put a moving average on here, basically the average volatility reading throughout this year was 14. That's our low category. Back to our heuristic here, where we thought about high volatility market environments, low volatility market environments, 14 firmly in our low volatility environment. And so what that tells us is that when you have a very low volatile market, you have a, generally speaking, you're probably in an uptrend. You're probably in a good, healthy environment. Things are working, and you're getting paid to hold overnight risk. You're getting paid to participate in the market and to not move across signals too quickly, right? Because there is not a lot of fear out there. Things are generally working. So if you do get lulled into a 1%, 2% correction in a stock, and suddenly you're getting out of it because you take a stop loss, then you're looking for another trade. When you're moving really fast, like our Merlin and Lamerick trading systems are, then you tend to miss out on this upswing. You tend to miss out on the fact that the market is in fact grinding higher, that the higher lows are coming, and that buyers are stepping into this market. Now, of course, that's good until it isn't, right? Eventually this changes. Eventually we're going to have a pullback and a retracement. But the point is, if you calibrate yourself and you think about being a bit more patient instead of being a Bob the day trader, which is working almost too hard for the environment that he has in front of him, you tend to find yourself being counterproductive. Now you may say, okay, Evan, well, so it's that easy, right? Just hold 4 positions, hope that the buyers come in, and that's it, right? Of course, that's not it, because you're going to get the curveball thrown at you when we enter into a bear market. So let's talk about a high volatility environment. And I'm not even going to go back to COVID, but I will go back to even 2022, when the average VIX was way up here north of 25, 20 for sure, and was consistently hitting readings of around 35, right? We were in a bear market. The S&P was down. NASDAQ was correcting, right? Everything looked fairly ominous in the markets. And so if we just look back now at our performance throughout this time of our trading systems in 2022, these are all swing trading systems. So we don't truly have any day trading systems that we're running here at the Trade Risk. But if we look at our 2022 performance, we see exactly the opposite results. Okay, so we take a look here at our Galahad trading system in 2022. That's our lowest frequency trading system. It doesn't, it trades the least amount out of all of them. And you can see that it was down 14.5% for 2022. If we look at our Merlin medium term system, this was down 21% on the year. And now we take a look at Lamerick here, our shortest term trading system. It's still an overnight swing trading system. It was down 6.29%. So essentially what you have is you have the exact opposite results here during corrections and bear markets. And this tracks because Lamerick here is still making hundreds of trades relative to Galahad and Merlin. It's still out there turning through opportunity and trying to manage risk and look for the next safest spot or best spot to try and hit a strike on a trade. So the fact that it held up the best on a relative basis, everything was negative, right? All 3 trading systems lost money in 2022, but it certainly did a heck of a lot better than Merlin and Galahad. And this time, the extra trading that it did saved its butt. And the reason for that, again, was because that regime, that volatility regime, was hanging up here in the 25.19, I believe, was the average for the year. So that's how that trading system is really, hitting more of its sweet spot. Still not great because we still lost money in this trading system. But again, it was better on a relative basis. So back to this type of environment, when we have high volatility, we want Bob the day trader on our team, right? We want him going out there and placing hundreds of trades per week and being cash at night, because when the VIX is high and when there's really no benefit of holding overnight risk, this is where you want to double down on your sleep. You want to take your vitamins, you want to lay off the alcohol, you want to get good night's rest, and you want to hunt for that opportunity, which is occurring on a day-to-day basis because there's so much fear and uncertainty in the market environment. Okay, so this little illustration here, this trade analysis, was something I thought was useful to share. Basically, the more active you're trading, right, the better you're going to do in volatile environments. And when things slow down, right, when fear comes out of the market, you actually get paid to be more patient. You end up having to work less, right, spend less time in front of the screens, and you get paid more if you stay more patient, right? It's a great win-win. Who doesn't want to work less to make more money? But the point is you can be counterproductive when things cool off quite a bit, because as soon as that stock sells off and you say, oh, I got to manage risk, I got to take my stop loss, and then I got to go find something else. Look, that's great in theory, and I'm not encouraging anyone to ignore stop losses or to say, hey, Evan said because the VIX is low, I don't have to take stops. That's not the takeaway from this video, but it is the takeaway that you want to be thinking about the environment you have. You want to maybe loosen your stop losses. You don't have to take more risk on. You would take less size, less position size, widen out the stop loss as an example to make sure you're sticking with a trade and you're being consistent with what the market environment is giving you in terms of opportunities, right? Like that is the core kind of takeaway here. So I want to know from you if you found this video helpful. Do you come away with similar conclusions based on your own trading? How do you think about this? Is this something that is beneficial to you to use volatility as a bit of a gauge, a speedometer of sorts in your own trading? I would love to hear it in the comments section below. And as always, thank you so much for tuning in. We've got lots more kind of bite-sized content like this. We really, spend a lot of time here helping traders kind of automate or create more rules-based processes using price action analysis. This is a little bit of a step in that direction. And again, we got our free email newsletter that would definitely suggest checking us out, signing up for, and just staying on the train here when we publish new educational content like this. So hopefully you enjoyed. Take care, good luck trading, and thanks for tuning in.